Recently, it was reported that Bitcoin mining now consumes as much as 0.25% of the entire world's electricity supply, putting it on par or higher than many small nations. However, the actual emissions and impact on climate change, according to a new study, aren't as negative as once believed. Bitcoin's blockchain network is secured and validated through a process called proof of work, where miners utilize powerful computer processing to solve complex mathematical equations. Related reading: Bitcoin mining now consumes 0.25% of global electricity. Specially designed computers consume large amounts of electricity in order to solve these mathematical equations. Miners are rewarded for their time, effort, and expensive in electricity with a set amount of Bitcoin, currently at 12.5 BTC. Mining difficulty rises as time goes by, requiring more and more energy supply. Meanwhile, the reward miners receive for their efforts and money invested decreases at each scheduled halving, a pre-coded event where the block reward miners receive is cut in half. Because over time, both BTC earned is reduced but energy requirements continue to rise, Bitcoin has been cause for concern in terms of its overall impact on the climate. However, a new study has revealed that the impact Bitcoin has on climate change is significantly smaller than once thought. Suzanne Kohler and Massimo Pizzol of Denmark's Aalborg University claim that previous studies used data that assumed electricity generation in China, where as much as half of all Bitcoin mining takes place due to cheaper energy costs, was the same across the board. But the new study breaks down emissions within China to a regional level, showing much lower emissions of 17 megatons of CO2. The previous study had nearly 4 times the amount of emissions pegged to Bitcoin, at 63 megatons of CO2 per year. For example, hydropower in the Chinese province of Sichuan contributed to lower overall emissions, while Mongolia's coal-favored energy sources added to it significantly. Overall, China alone accounts for 47% of all of Bitcoin's carbon emissions, from a global standpoint. Canada, Russia, and the United States follow, in terms of global leaders contributing to Bitcoin-related emissions. The study also further points out that it is almost entirely the electricity used for Bitcoin mining that contributes to the emissions, and that the production and disposal of mining equipment only accounts for just 1% of Bitcoin's total emissions. Related reading: Major Bitcoin milestone, only 3 million BTC left to mine because Bitcoin's mining is decentralized and spread throughout the world. Kohler and Pizzol say it's difficult to get an accurate read on emissions, and that more data is needed to truly understand its impact on climate change. With the crypto assets network only growing, and mining difficulty increasing, energy consumption will only grow as well. The discussion of Bitcoin's impact on climate change will likely continue for the foreseeable future.